So, I mean, what do you think of Elon's really, I wouldn't I'm not surprised. I didn't see Elon coming out and saying I recommend voting Republican. Like that's pretty serious that he put that Twitter. I mean, it's upsetting for the stock. If you're a short-term holder, it's kind of upsetting because I think a lot of the drop the last couple days in Tesla relative to the market, especially,
Yeah.
I mean, a lot of the growth
It-
tech stocks have taken a hit yesterday, but Tesla abnormally so. And I think a lot of it just there's a lot of on the margins people selling, afraid that Elon's ruining his credibility and alienating half the population and boycott risk, all this stuff. So I think there's just kind of marginal selling on Tesla. So if you're a short term horizon guy, whether it's options or just whatever, trying to invest short term, it's very disappointing. But for long term Tesla stockholders, I don't think it moves the needle. It doesn't matter. It just gives a better entry point to potentially buy more. But I think short term, it's hurting the stock price. What do you think, Minute?
yeah, I'm questioning whether that really was an impact or not. I mean, so I saw his tweets
Mhm.
and I was like, I guess I was not as surprised by that because he's been saying the same sort of thing, just maybe not as overtly for a while now. Of
Yeah,
like he's planning to vote Republican for the first time. I mean, he was saying that months ago. Um,
yeah,
so to me, like I wasn't really surprised at all that he said that. I mean, maybe there's a difference between advocating that others vote Republican in order to kind of split the powers,
yeah,
as opposed to just saying what you plan to do. That
yeah.
I guess I would just be I'm a little I'm questioning that is actually what drove the underperformance.
Mhm.
We have heard kind of reports that Schwab raised the margin requirements on Tesla, and so you could have some margin calls right now. I'm sure some other
Mhm.
brokerages have probably done that. And so people who are overextended, could be forced to sell at lows, which can obviously create kind of cascading effects. So I don't know. I mean, it's very easy to kind of create these narratives that Elon's going off the deep end or just getting involved in stuff that he shouldn't be, and like ongoing Twitter distraction, yada yada. List of things that Elon has done that is not PC is very long, and so you can certainly
Yeah,
point to those and say, okay, investors are losing confidence, or institutional investors don't want to be associated with the stock, and so they're selling. I'm just not sure if that's really the case. I mean, to me, there could be other market dynamics at work here that might more easily explain it. But
yeah.
I do agree with you. Like, it certainly creates more uncertainty at a time when the stock's already low and it's getting kicked while it's down.
Yeah.
So
Yeah, I mean, the stock was like 235 like literally a week ago, and now it got down to 185 this morning. I'm like, oh my gosh, like, or 186 something, so it's like $50 difference in a week. I'm just at the monthly chart. That's huge, a huge drop. It's
yeah, I
disappointing for
mean,
sure. I mean, Nasdaq
September
didn't drop that much in a week. I mean,
September
it's
20th, which is like a month and a half ago, the stock was at 309. So
oh my
like
gosh,
it's kind of crazy how quickly it has just completely fallen apart. But I would argue not on the basis of any fundamentals. Like the
not
Q3 numbers
fundamentals, yeah,
were
just
like a
perception,
mixed bag, like we said, but like reasonably okay. Um,
yeah.
and so it's just I think it's really overdone right now, and so it wouldn't surprise me if we move back the other way just as quickly. Although I wouldn't kind of trade on that, trying to
Yeah,
like hope for some V-shaped recovery. But I do
yeah.
think the fundamentals are good, and it's certainly possible that we could have a month or two that looks like the opposite of what we just saw.
Yeah. I mean, it's gotta be so painful. I mean, we're trading below the S&P 500 inclusion price. We're getting close to the price of where the S&P inclusion announcement happened. We're getting close to that price. We're not there yet, but it's just in the last 2 years, if you bought Tesla, you're probably underwater now, and so there's so many new people that got introduced to Tesla as an investment in the last 2 years. What do you think? It's probably gone up like a number of retail investors in particular, just from looking at the Twitterverse. I feel like there's at least twice as many people investing in Tesla or bullish talking about Tesla versus more than 2 years ago, right? I mean, it just seems like the audience has grown tremendously. So it just seems like there's a lot of people in pain right now with Tesla. And so maybe that also contributes to the breakdown here because as more people are not up, as more people are breaking even and going under, they're like, let me close out Tesla. People that are bought in the last 2 years that are just disappointed now.
Yeah, yeah. I mean, either if you're, you kind of saw the huge 15x run up or whatever in 2020 and into 21, and you kind of invested then and did really well at the end of 2021. Maybe you don't have the confidence that longer term holders, and you're certainly a lot longer term than I am. But yeah,
Yeah.
it could be shaking out some weak hands. I think that's certainly a
Yeah.
kind of fair assessment. Or
Yeah.
people might just want to diversify. I mean, there were the kind of mantra on Twitter a long time ago was just like everything in Tesla and nothing else. And um, I think a lot of people are, seeing the downside of that, in this current market. So I
Yeah.
think there's a lot of reasons
Yeah.
why
But like you said,
people
the
could be selling.
fundamentals, I mean, what at $185 a share, $186 a share, what's the forward PE on that? It's gotta be something ridiculous at this point, right? I mean, like
Well, it depends on like what the which number you use. So like the market, I forget the exact number, but the market was assuming like 650 or something like that. So if you do
Mhm.
like right now it's at 195, so let's just go 195 over 650, assuming that's what the market is. So that's a forward PE of 30, um,
Oh my gosh.
which is kind of like hilarious because you'd imagine if they deliver that $6, it's possible the PE ratio could compress further or just not move up. Um,
Yeah.
but like if they're actually increasing their earnings growth by that much, and like have the kind of operating leverage that we think they could have, um, it would be kind of silly for the PE to be 30 this time a year from now.
Yeah.
And at the same time, I think like the 650 figure that we use there is probably really low. We went
Yeah.
back through our own model pretty recently and did like let's try to do a very conservative case, like bring down all of our assumptions, to levels where we think it's more likely than not that Tesla would beat these figures. And I think we came up with something, I forget the exact figure, but it was north of like 725, something like that,
Yeah. Yeah.
$7.25.
Yeah.
So with a more reasonable figure maybe being
And
north of eight or nine
assuming
dollars.
these are all assuming, like, no meaningful FSD uptake rates, right?
Yeah,
And this is all assuming that, like, call option is worth nothing more than it
worth
is now,
nothing.
or worth
Yeah.
nothing.
And energy is worth nothing, which is probably worth talking about too, with like the
Yeah.
Lathrop factory. I mean, that seems like the dark horse in Tesla's fundamentals, which is like very, very close to ramping up.
Yeah.
Um, Maybe I could just share a little quick
Yeah,
math
share a
on
little bit
that because I've
more.
been
Yeah.
like, there's a couple people like Mad Manx has been kind of talking about this a lot lately. We had him on the Tesla Energy, roundtable that we had a while ago. Bradford Ferguson talked about this too. But like the Lathrop factory, which Tesla's ramping up right now, they just released a video a couple weeks ago talking about their hiring for that, and they're trying to ramp up. But it's a 40 gigawatt hour factory devoted exclusively to megapacks. Um, and 40 gigawatt hours is bigger than the original gigafactory in Nevada. So
And remind us what the mega packs are for the people that aren't
yeah. So
totally clear.
the mega packs are like the largest stationary storage pack that Tesla offers. So like for large scale utilities and that sort of thing, they're really scalable. They've got a huge backlog, a multi-year
What do they sell
backlog.
for? They sell for, like, 6
So
figures or a million plus, or I
I
don't know,
I,
there's
I forget
figures plus,
the
right?
exact specifications because I tend to look at it on like a dollar per kilowatt hour basis, and by
Yeah.
that math, it's something like $400 or $500 per kilowatt hour. Kind of depends on which configuration you choose. But yeah, I mean, for the most part, you're talking about multi-million dollar installations
Yes.
of these mega
Big
packs
ones.
to large scale kind of utility customers. And there's always been like a multi-year backlog, and they were cell constrained, like Martin Vieca was talking about. So they've just never, they've never really devoted time to satisfy this part of the business. But it really could have a very material impact very soon. So couple numbers. So at 40 gigawatt hours at the average price, that's revenue of about $27 billion per year, and that could
Mm.
be happening very soon because like the plan is ramping right now.
Mm.
And so for reference, like in Q3, which was record deliveries or installations of their megapacks, they had just over 2 gigawatt hours. So you'd be
Mm.
talking about like a 5x increase in quarterly installations above the highest level that they've ever seen. Um, and just for another idea of scale on the revenue side, so Q3 total revenue for Tesla, automotive and energy and services, everything was $21 billion, and of which
Mhm.
energy was just over a billion. So you're talking about
Wow.
$27 billion annual opportunity. It's like it's just a absolutely massive increase in scale. And if we know anything about Tesla's operational efficiencies, when they really ramp up production, that's when the margins come in. So
Yeah.
energy margins have been like 5 to 10% historically, and so if they can actually have the types of efficiencies now that they've got a dedicated this Lathrop facility, it's entirely possible that they could have 25-30% gross margins, especially if you consider the tax benefits that are in the Inflation Reduction Act, where there's this 30% investment tax credit that customers get. So that'll give Tesla a lot of pricing power on these mega packs.
Yeah.
Um,
There's a
and
lot
there's
to
an
talk
inverter
about with
tax
the
credit.
Inflation Reduction Act that we barely scraped the edges of with our energy roundtable discussion a couple weeks ago with Mad Manx and the other guy Duncan. We're going to have
Duncan,
a
yeah.
follow up with them in January, February, or March to go over more details about how the Inflation Reduction Act is really making huge, creating huge benefits for Tesla's revenues and profits and the consumers of these things. So. Yeah, I mean, Brian from Next Big Future says it's 3.9 megawatt hours per megapack, so it's about a 1.6 to 1.9 million-dollar cost per megapack.
Mhm.
That seems about right. So obviously these bigger installations are lots of megapacks usually combined. I remember the original one was the original big one that I think made everyone's eyes kind of wow. I don't know if you probably remember is the Australia battery thing that
Yeah.
Elon tweeted back to some Australian billionaire. Yeah, we'll do this in under 100 days or whatever the timeline they did it or something. There was some yeah, that was kind of the original eye-opening, I feel like, to me, of what these mega packs can do. And I don't think they were called mega packs back then, but it was like the first giant battery they built.
Yeah, yeah, it was, and I think the economics of that particular installation, a Hornsdale was the name of it.
Yep.
Thanks, boil down age. Um, like the economics of that one were incredibly strong. But I've been like saying for years that's not a replicable project because they had a very serious frequency,
Mm,
regulation issue in that part of the Australian grid,
mm,
and that's not like there just is not a market to pay, Tesla or anyone for voltage regulation at anything close to the rates that Hornsdale project was paid in South Australia. So the
yeah.
economics are not going to be like that. I think it was something like a 8-month payback for the owners or something. It was just something absolutely absurd. And so like it's not going to be that sort of thing. I don't think you're going to have like 80% gross margins and
Yeah.
anything crazy like that.
Yeah.
But going from 5xing your energy revenue and doing so at margins that go from 10 to 25-30% is a very real possibility that I'm almost certain no Wall Street analysts are kind of baking in. And so I think this
Yeah.
could be
It's like
a pretty meaningful surprise on the upside for the next couple of years.
Yeah, and Brian just corrected it's about 2.4 million per mega pack. They raised prices. So this is like an example of one of the call options within the business, like FSD beta, but this is like call option within the business that's meaningful, that is very likely to be coming to fruition. I mean, it's slowly coming to fruition, but it's very likely to keep increasing as a very meaningful
Yeah.
impact of the bottom line in the coming quarters. And it's
Yeah,
something we can clearly see progress on, quarter over quarter, versus trying to guess the FSD uptake
yeah.
rates.
Yeah, I mean, to me, it seems less like a call option, and more like so in Q3 of 2019, when Tesla first turned the corner of
Mhm.
profitability. Remember at that time, everybody expected that their gross margins would just kind of compress back down to where they had been historically, and that their
Yeah,
OpEx would just continue to increase, at
yeah,
very high rates. I remember thinking that just doesn't make sense because they were cutting their overhead at the time, and if they were selling more cars in the future, why would gross margin go down? Let alone
yeah,
operating margin. So I was like, that just doesn't
uh,
make sense. So to me, it seems like a similar sort of thing where, like, very clearly, the energy revenues are going to increase, and it seems very likely that as you scale that the margins will increase pretty substantially as well. So and I
yeah,
meant like. How much better are the margins going to be at the Lathrop factory compared to however they've been cobbling these together, out of Giga Nevada now?
yeah,
They've had a lot of time to figure out what's the best way to design this factory, and I would have to believe that the margin potential is pretty substantial.
yeah, absolutely. So this just, I think the business versus the stock is so hard to separate. And we're talking about the business. That's all most of us, content providers, YouTubers, that I think that's where you get the quality information, like the signal versus the noise is the people that can analyze the business and talk about the business of Tesla. I mean, trying to read tea leaves of technical analysis charts and predict the actual stock price, it's so noisy and random and it's it's impossible. People that do that successfully become wealthy enough to not have to be content providers, in my opinion. So I think I think the stock is a separate. It's affiliate. It's related, but it's very different from the business. In the end, in a long term horizon, 10 years or whatever, you know that the fundamentals of the business will justify whatever the stock price is going to become eventually. There'll be share buybacks, dividends, whatever PE values given to it by the market. But in any 3 to 5 year period, especially when the Fed is moving valuations all over the place with interest rates, it's very messy and it can feel random or just it can feel nonsensical and irrational, and that's sort of where we're at right now, with a lot of stocks, especially Tesla. And then you throw in the Elon factor of him, being the biggest living person in history right now and getting every possible negative news article written about him, drawing attention to Twitter and all this stuff, and people just hating on him, half the country hating on him for everything he does. So you draw that into the equation. It's even more volatility in Tesla stock that we're seeing right now. But if you're a long-term stockholder and you don't, you're not trying to trade short term, then it doesn't rattle me for my long-term Tesla holdings, my personal long-term Tesla stock. For our fund, it's very rattling, because it's much more short-term oriented and it's
Yeah,
rough,
it's true.
Um, so, but if you're disciplined enough to have a large amount of stock that you're just going to hold long term and not be on margin, not try to buy call options, if you can stay disciplined, in my experience, to have that kind of core position, I feel like the more you study and listen to content about the business of Tesla, the more at ease, the more I can sleep at night with those core holdings, versus getting nervous even on that. There's no reason for me to be nervous on my core holdings of Tesla, if that makes sense. Even though the
Yeah.
stock has been capitulating ridiculously low, getting lower and lower. And even if the stock continues to capitulate down, I'll be, I'm not going to have FOMO that I should have sold now and bought back at $150 or something. I can't have, I just don't know. It could start going back up now. Um, so I just wanted to make sure people can separate the business from the stock, because it can be separated for a year. It cannot be correlated for years. I saw it from 2014 to 2019. It felt very uncorrelated and frustrating and, very disheartening. But I continued to study as much as possible on Tesla Motor Club forums and, Rob Maurer's incredible daily podcast and a couple others that were back then, going on for a while, Dave Lee. And so the more I was able to continue studying and talking to, other people who study the business, the more comfort I felt in keeping that stock position, the core stock position I had, especially.